So, can velocity banking be done with a secured loan? This is Ben Morales. Thank you for tuning in once again. And that was a question that was actually asked to me in one of the comments, one of the other videos I did by Jeremiah. So, Jeremiah, if you are out there and by chance you happen to see this video, this is your answer to your particular question. Thanks for putting that down in that comment section. And before we continue, I definitely want to say thank you for all the comments that have been coming in throughout the course of the last videos. It really, really helps me to be more engaged and really find out exactly what you all need help with. So in this particular scenario that Jeremiah gave me, again, we're just going to be talking about the numbers that he gave me. He said, what if I use a secured loan with or for $10,000? That secured loan has a payment of $524 and it has 24 months term attached to it. Now, the first thing I did is said, wow, that's a really high payment. And obviously it has to do with the timing. But as I researched what the payment or what the interest rate would be on this particular payment, I found that the interest is right around 23.06%. So Jeremiah, I would definitely think really long and hard whether as to this was something that you want to do. Now, maybe I remember from when I worked in a bank and someone was looking for a secured loan. That typically was a client who was trying to establish some additional credit, maybe had a thin profile, and the banker convinced them, that maybe you should do this, take the 10,000 that you have in your savings account and get your loan, and you can build and strengthen your credit that way. Let's take a look at this as an example, right? Because since you didn't share your numbers, I don't know exactly what that might be. So I'm using numbers that were from a previous client, but the principle wouldn't change. And here's the answer why you can't use a loan for velocity banking. The simple answer is the impact on your cash flow, right? When you're implementing the velocity banking strategy, you are looking for a way to more quickly and efficiently pay off debt. And you need to be able to leverage your cash flow to do that. So in this particular example, if this indeed was the expenses that Jeremiah had throughout the course of the month, what would happen in this particular case is we'd be adding a new expense of $524, which means now the expenses throughout the course of the month are $5,070.65. Okay. The unfortunate part with that is that if it has an increase to the cash flow, that means, or rather, if it has an increase to the expenses, that means it's going to have a direct correlation and a decrease to the available cash flow, which is going to change this to 115 and 35 cents. So the cash flow actually went down in this particular scenario. So you can see just by that alone, all it does, it add expenses to your particular budget instead of actually helping you to improve cash flow. And that's the difference, right? Jeremiah could actually say, well, I have an idea. What I want to do then is throughout the course of the month, every time I get paid, I'm going to send extra payments to my actual loan. And that should really drop the amount of a balance. And that would be true. The balance of the loan would drop. But don't forget that throughout the course of the month, he'd be responsible for an additional $4,546.65 of expenses. And he's going to need cash to be able to pay those expenses throughout the course of the month. And that is where a home equity line of credit comes in, because loans are closed end. So it doesn't matter, right? Or I should say closed ended. So it doesn't matter the dollar amount that is sent to a loan or mortgage, an auto loan, a personal loan, student loan. They are all close-ended. So every single dollar that is placed into that particular loan is a lost dollar. You can't recuperate that dollar. You can't use it again throughout the cycle of the particular month. Now, with a line of credit, you can, and that is the big difference with the particular line of credit. So the answer is you cannot use a loan to do the velocity banking simply because of the leveraging part of the line of credit. And this is what that would look like. If instead of getting a loan, he acquires a line of credit for $10,000, and if throughout the course of the month, he deposits the entirety of his income into that line of credit, as the month goes by, right, he will also have access to funds to be able to pay for his expenses. Now, if he were to place the entirety of his income into that line of credit throughout the course of the month, then there's going to be a moment throughout the course of that month, right, that his income, or rather his balance, could be as low as $4,814 because payments that he is making in the form of, or income that's being applied in the form of payment, is actually impacting the balance of what is owed on the line of credit. And then that same line of credit, as payments are made, now becomes available for him to use. So what that looks like is this: 10,000 is the starting balance. $5,186 is actually the income or payment. That means the balance is now $4,814. But if we take that $4,814, that means that what? Throughout the course of the month, how much money is available to use for payments? Well, that's not a trick question, but the answer is right here. $5,186 is still available for him to be able to use and apply to the $4,546.65 that he has in expenses. See? And that's how it works. That's the great advantage over using a line of credit over a loan. And you actually can't do this feature because, again, close ended, you send in your money, it's gone, it goes to the bank. Lines of credit, open ended, right? Open ended line of credit. And the big thing is that funds, or that cash flow, can be used over and over again, making the payoff and the cash flow cycle more advantageous for you. So, Jeremiah, hey, thanks, Jeremiah, for putting the comment in and asking this particular question. I hope that this helped you and it makes a lot of sense. I want to continue to make this content for you. So if you have any other further questions, please put them down and share and continue to like the videos, as it helps the channel to continue to grow, and more, it helps to educate more people around this concept, which is a life-changing concept and apply correctly for your finances. So until the next video, take care and God bless.